Ladies and gentlemen, Greg Michalowski from ForexLive.com. Today's date is November 28, 2023. The Aussie versus US dollar is making a play to the upside from a technical perspective, and that is encouraging for this pair and for the buyer. So let's take a look. Looking at the daily chart, if you look at the high price from 2023 that was reached in early February to the low price that we had in the month of October, the price is getting and extending above the 38.2% retracement of this move to the downside. That is always a target level that I like to see surpassed. Getting above the 38.2% shows that the buyers are a little bit more serious than just a corrective move to that 38.2 and then a rotation back to the downside. So getting and staying above that level is going to be key today and going forward. That level currently comes in at 0.66087. It's my close risk for buyers now. Staying above is more bullish. Now also that is happening here over the last few days has been a move above the 200-day moving average. That's this green line right here, which currently comes in at 0.65817. And some traders may say, as long as the price can remain above that level, I'm still bullish for this pair from a technical perspective. We can see that earlier in the month of November, the price came up to that 200-day moving average and found sellers against that level. And in trading just 2 days ago, the price tried to move above that level, but could not sustain momentum into the close. So that's just Friday's trade and closed just below that level. So the move up to the upside yesterday and extending away from that level and continuation today is more bullish for the Aussie versus US dollar. So risk levels right now are 38.2 on the daily chart and the 200-day moving average. Staying above is more bullish. Now, let's take a closer look at the hourly chart and see what that is telling us. And what I like from a bullish standpoint in this chart is if you go back to last week's trading, we did try to find support buyers against that 100-hour moving average. Now, admittedly, the price did fall below that level right here, but the selling dried up, and the next thing the market did was find support buyers once again against the 100-bar moving average here, and here. Again, tried the downside here, couldn't do it. Reestablished support against the 100 here, and here, and has moved to the upside of the last day and a half for the Aussie versus US dollar. So the buyers are showing their ability to and their desire to keep the bias more to the upside as well off of the hourly chart. If I were to put it on the four-hour chart, you can see the importance of this swing area through here. It's somewhat modest, but a 4-hour chart, we came down to this level, bounced, and then fell below that level, returned to the level here, had that failed break, and then rotated to the downside. It wasn't until earlier this week that the price started to trade above and below that level. So 0.6600 area is a risk-defining level off of in the short term off of this 4-hour chart, but really the 200-day moving average is going to be key, and also off the daily chart, the 38.2% retracement at 0.66087. Those are my focus levels for risk for the Aussie versus US dollar going forward. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.